So how you doing, David? Great to
I'm
talk
good.
to you
Yeah, good.
again.
Good to see you, Dale. Good to hear from everyone.
Yeah, so key question, we've had that sell off 10, 12%. S&Ps, would be the strangest bottom I've seen in a long time if Friday was it, where you just close bad and turn up and everything's okay again. Um, but there are some people that think that was it. What camp do you fall into?
Well, and right, isn't that the expectation that you get from the market, right? You sort of get
Yeah,
this amazing optimism that comes on an uptick, I'm finding. And that to me, that is a very kind of bearish kind of characteristic, right? Bear market rallies, I always say, are sudden,
yeah,
severe, and seductive. And it is,
yeah.
I mean, at the
Sharp.
beginning of one of those bounces, it feels really tempting to get into it. Um, but at the end of the day, I mean, when I think about how you actually track a bottom, a market bottom from a technical perspective, you usually get kind of three parts to it. And I think we're all kind of trying to skip to that last part, which is it already bottomed, right? We're sort of like, okay, that was the bottom. Like we want to keep declaring it. And what you have to remember, I think there are usually some good leading indicators that we haven't had yet. The most common one would be divergences, like some sort of divergences, some things making new lows and other things aren't. And I would say the S&P chart looks pretty familiar because semiconductors look like this. A lot of leading,
Yeah,
growth
yeah,
names kind of look like this. And there are outliers that are bouncing higher on earnings, but
yeah.
the
Like
average
Amazon.
stock is struggling here. And so I think you really haven't had that, and you haven't had a capitulation, right? I think the
Okay.
way that we traded Thursday, Friday, that's not a capitulation low, in my opinion. You're looking for a candle pattern like a hammer candle or a bullish engulfing pattern or something that shows a rotation from distribution to accumulation. So I think premature to consider this sort of any sort of bounce this week as anything but the latest move within this downtrend channel we've been experiencing for the last couple months.
And certainly a 23 VIX is not capitulation. That was the high of the move in the VIX. I would think that we would need it in the 30s to really have some kind of capitulation in the market.
Yeah, and again, I mean, Dale, market history is full of things that just happen and they're inexplicable. But on in general, you want to track the historical market rhythms, and what happens is usually a push above 20 is the beginning of this, higher volatility environment, and that's
New
what major
regime.
lows usually play out is when the VIX gets well above 20, up in the upper 20s, even up in the 30s. That's what we had back in
Yeah,
2022, of course.
yeah.
Again,
In March, when the S&P was 3,800, we were
that's
a little bit above it, right?
That's exactly
31.
right. That's exactly right. So I think yeah, I think this is the beginning of higher volatility. And what's so interesting is 2023 in a pre-election year usually would mean we get some strength into the fourth quarter. The average year, November, December tend to be pretty strong, but you don't have to go that far back. I mean, if you go to let's see, like a weekly chart of the S&P and go
There are
back to
exceptions.
yeah, go back to like 2018. There are plenty of
Yeah,
exceptions, right? In 2018, we
sure.
actually topped out in September. We actually bottomed out in mid-December. We did have a bit of a Santa Claus rally in the last, week or two of the year, but it was really a declining market. Now, the average fourth quarter looks kind of like 2019 or 2020 or
Yeah.
2021, where you have that strength into the end of the year. But it's not unusual to have a pretty good, to have a rough fourth quarter. 2018 may be an interesting analog to what
Yeah,
we're
that's
experiencing
where
here.
Kramer did his rant when
Yep.
Powell
Yep.
raised rates and then sang Kumbaya
Yep.
with Yellen and Bernanke. They were all around the campfire.
That's
Gee,
right.
you
That's
shouldn't
right.
do that. So semiconductors have been some of the weakness here, David, in the group. Uh, the oils, people have been hiding in oils. We'll go to oils afterwards, but yeah,
Yeah.
so we're right there at a major moving average.
So, and again, I think semiconductors are actually at a really interesting point right now
Yeah,
because you are actually getting a bit of a divergence here we're looking at the SMH here.
yeah,
But if you look at a lot of the major semiconductor names, you'll find kind of similar patterns to this. In a lot of ways, this has been an incredibly orderly decline
yeah,
from the high at the end of July, lower highs in August and October, lower highs August, September, and now once again October. but now we're starting to hit a significant support level. And so, and again, it's like what I would be amazed if there wasn't some sort of bounce off of here. Like you usually would assume that there's some sort of bounce. It's not whether we get a bounce, which I think is probably going to happen. It's what happens afterwards. And I would be eyeing this 50-day moving average to see if we can hold above there. And if so, that sort of tells you maybe something is changing. But more often than not, this would be a brief bounce, and it's all about what happens right after that sort of bounce there. So I think semiconductors are important. The other thing I would point out, Dale, is with a lot of these charts, RSI at the bottom is a really good way to just kind of think about what's happening with the price, sort of like looking underneath the hood of the
Yeah.
price action. And what you have to remember is in a bullish phase, the whole range of the RSI moves up. So here in like late 22, mid 23, the RSI doesn't really get below 40 on pullbacks and often gets overbought on these rallies.
Yeah.
And the opposite is happening now, right? The conditions are more weak. So on these bear market rallies, the RSI stalls out above 60. So when
Okay.
we do get a bounce, which we will at some point, that's kind of where my eye immediately goes down to see if we're able to get above 60. And if so, that means usually enough buyers are coming in, this could be more sustainable. But if it stalls out where it did in October and late August, that's usually a really good sign that the bear market sort of progression is continuing and that we're just setting up for another leg lower.
Okay. Do you think that the market is handling the geo risk pretty good or actually, it's been going on for 3 weeks. Until last week, we really didn't have any real sharp declines.
Yeah.
That was a pretty negative week. I think they're whistling past the graveyard with what's going on in the Middle East, and that we may not have seen this kind of geo risk in 50 years, like the
So
70s.
it's so interesting because I think you're right, Dylan, in a lot of ways. And I would argue that newer investors, right, novice investors, and certainly in the last 5 years, we've had an influx of new market participants. Any younger investor, right, any sort of Gen Z investor, you really haven't experienced a lot of these things before. And and it's other things. It's a rising rate environment. It's a Fed
Yeah,
getting to the end of a rate hike cycle. And if you have experienced them, you haven't experienced a lot of them very recently. So this is probably out of your recent memory. And I think
yeah,
for a lot of investors, they're still sort of in that, sort of the recent way of thinking, which was the market recovers, growth stocks lead out, semiconductors are a good place, the mega cap names lead, and that's just kind of how things go when we get pulled up again. These are really extenuating circumstances and conflict in the Middle East to the scale that could happen. I mean, it would certainly be a rarity to get, if it escalates a little bit further than this. And a full scale conflict, yeah, usually has severe impact on oil prices. Higher oil prices tend to have significant impact to a lot of other things that you would expect, like energy stocks, but things that you probably wouldn't as much, like consumer, products and
yeah.
travel and tourism and things like that. So it's hard to predict what geopolitical events, how they will unfold, but given what I'm seeing, I would say there's an elevated risk of oil prices accelerating to the upside
Yeah,
because
the
of the
shares are
potential.
not acting that way, David. I mean, look at them sitting right here on the 200-day.
No, and I
Anyone who
think,
bought them three
yeah.
weeks ago is underwater big time if they bought them just because hostilities, because of the massacre, if they bought oil
Yeah, and
shares.
that's right. And I think what's happening is the market is under appreciating or undervaluing the possibility of that occurring. We're leaning away from that sort of doomsday scenario where things kind of accelerate. But I would argue again, as an investor, it's not just about being right, although that would be great if that was our goal, and it's good to be right. But it's also not being wrong, and it's also measuring those risks of the thesis being incorrect. And I think if you're just if you're assuming that oil prices remain very stable, you're minimizing that risk of a big spike. Energy stocks
Yeah,
for now really haven't materialized. There's this incredible basing pattern. We're still kind of at the upper end of this basing pattern and never really broke out. We've had these
yeah,
numerous pullbacks to the 200-day moving average.
yeah.
But I mean, again, I'm still bullish
Oh,
on the
I
energy
can't short
space relative
crude.
to others.
I can't short crude with the overnight. I mean, everyone I talk to, David, is sanguine. Oil people like Anas, and they're saying nope. there'll be no embargo. The Straits of Hormuz will remain open. How do they
Right.
know the Straits of Hormuz are going to stay open?
Right.
I don't know. I think that the U.S. government doesn't know, and that's why there's a few carriers over there.
Yeah.
So I think really the flashpoint would be if another front opened up with Hezbollah, because they're more of a direct client of Iran. So if
Yeah.
that happens, they were probably waiting for the IDF to get bogged down in Gaza, but
Yeah.
they're not fighting the war that way. So that's what I'm keeping an eye on, and not
No, and
just
I
because I
also
like,
think, Dale, it's also about the scope of it, right? So I mean, if there
yeah,
were other actors that were pulled in, like you mentioned,
yeah,
from other,
regional,
yeah, if it becomes more of a regional conflict, then there's a risk of it becoming the next level, right? There's always
yeah,
that risk that it accelerates to another level. So then all of a sudden, if more participants are in there, if it's multiple fronts, if it's a larger scale, then there's all of a sudden the risk of another, what's the next level above that, and what would those implications be? And that's when there can be dramatic effects on global economy. Still, now it's very limited. I think the market is pricing in a limited sort of
right,
ripple effect to this. But again, it's a
right.
risk that I would not be unfamiliar with if I'm investing right now.
Yeah, so I mean, compared to the war in Ukraine, so we're getting away from the charts a little bit. Um, it's a more flammable situation than the 2 year war with Ukraine and Russia, um, because it could bring in more players right away. And that is really, I know Russia's an oil producer, but that is really the lifeblood, the Middle East, Strait of Hormuz for Western democracies, even though they want to go green, they, you know, that choking off the Strait of Hormuz would be, um, I've heard people say $200-300 a barrel. That happens.
Yeah, if you think about the upside potential, and again, it's a significant amount. And again, is that a high likelihood? I would say at this point, no. But is it a
Yeah,
likelihood that you want to think through? Definitely.
yeah. So gold really rallied strong, but except for a few of the miners, Dave, I haven't been felt like I missed that much. How do they look to you?
No, and it's interesting that and you usually assume it's kind of like with oil and oil producers or gold and gold stocks. You assume that those are pretty highly correlated, which they often are, right?
Right.
It makes sense that
Yeah.
Newmont mining is going to do better with higher gold prices. This is one of those times where it's really not the case. So gold really accelerated in October. You look at the GDX, and from a technical perspective, two completely different charts, right? This,
Yeah.
the GDX gold miners, sort of languishing below $30. And we've kind of been highlighting this level here. It's just
That might
this
be a neckline, bro.
very much so, right? Very much
And
so.
then
And
and then we
is it
put
is
in a
it the
right shoulder.
yeah, it's not a textbook perfect head and shoulders bottom, but it's close enough that I can see 30 as a pretty meaningful resistance level.
Yeah.
You compare that to the GLD, which just blew right
Right.
through,
Yeah.
moving averages and went up. I would speculate that short covering was a big part of this. I think
Oh
a
yeah.
lot of investors got caught on the wrong side of this and just had to cover in here. But gold out of the commodity space, we have oil languishing.
Yeah.
Gold isn't too bad of a place to be. Right
Well,
now overbought. So expecting, and just came out of that yesterday. So wouldn't be surprised if there's a bit of a pullback after the run that we saw in gold. But overall, I'm looking at the 200-day moving average. I think holding that could be pretty meaningful, given the risks that we just talked about in the previous little segment. That's why I
yeah.
think gold is a pretty decent opportunity here, just to diversify away from other areas.
Are the bond bears about to have a haircut? TLT?
Yeah,
You know,
so bonds are a really interesting one. If you look at the TLT, if you look at the ag, it's giving all the signs of bottoming.
yeah.
I mentioned, like
There's
with
your
earlier with the
divergence.
S&P 500, you've
Right.
not really seen any divergences, right? Any sign that the market's
Yeah.
moving lower, but the momentum is starting to change. You actually are getting that on the TLT
Right.
and ag. So lower lows in October, higher lows in momentum. We were oversold in early October,
Yeah.
not oversold in late October. And again, that usually indicates the exhaustion point of the trend. And you often get bearish divergences at the end of a bullish run. So I wouldn't be surprised if we get a bit of a counter trend move here, a bounce higher in bonds and a bit of a pullback in rates. The 10-year yield's kind of getting up to that 5% level, never really pushing above there and sustaining above there. I think eventually we do get above there, but for now, it seems like there's a bit of a mean reversion to happen. So I would be in the short term. I'm more of a buyer of bonds, betting on a bit of a mean reversion upwards.
Yeah, there could be, I see two drives. There could be one more shot down, but that would be your second major divergence. It'd be pretty
That's
glaring
right. That's
if we
right.
hit a new low. So I'm actually scaling into an ETF. I think it's TM something O, or it's a triple ETF. You
Yeah,
know,
yeah,
I
yeah.
need
I don't
I need
have a
to,
problem with that for as a short term play. I think that's a
yeah,
decent approach, though. I like that.
yeah. Anyway, I'd like to get your view on the dollar. You know, these two are pretty correlated.
Yeah.
Um, you know, we've had a great run in the dollar. Is this just consolidation or
It
just
is, yeah. So
evolution?
pretty impressive run right from mid-July to,
Yeah,
really early October. From there, it's really, I mean, October was really kind of a yawn for the dollar,
yeah,
sort of consolidating. And this is pretty common, right? From a technical perspective, you usually have an impulse move and then some sort of corrective move, right? Some sort of consolidation or a brief pullback. But you have to remember that markets can correct in one of two ways, right? In price or in time. So if you look back at like 2022, you had these price corrections, right, which is a big run
yeah.
and then a brief
Correct.
pullback. Here in March of 2022, it looks very similar to what we're seeing now, which is more of a time correction, right? It's more of a run, and then we consolidate. And I think the signal you're waiting for, and the signal I'm waiting for, is this right here, right? Early April of 2022, you had this sort of rectangle, coil
Yeah.
pattern, you'd probably call it, and then a breakout above that, sort of indicated that next leg higher. That's what I'd be looking for here. So I think 107 is the trigger I would be looking for. That's where I have an alert set. And a
Okay,
break
nice.
above there, I think, continues the way higher.
Okay. You know, I was watching a sector, unfortunately, just watching it. But you know, with general market weakness we've had, they are pulling back. And you think about things like energy and even the underlying uranium price. We've had a pretty good run in uranium issues. I'm wondering if you think those thoughts are correct and would be buying pullbacks if you have anything in uranium that you follow.
Yeah, let's do
So
probably
it
just
was
bring up
kind of a
URA.
sleeper for a while, but yeah, okay, Cameco, yeah, okay. Well, it looks like we're in a pullback, might in a pullback phase, but
It is,
these
yeah.
have,
So uranium, I was going to say uranium really good in September. They kind of pulled. This is
yeah,
URA, one of the uranium ETFs. So I'm
yeah,
using
okay,
here for simplicity. If
that's
you
good.
if you look, what I like about this chart, and again, what's interesting about this chart, I'll tell you why the technicals are pretty attractive here, but then the real reason why it's attractive at the end. So the technical
Okay,
reasons are you've pulled back, right? You made a new swing high, and then you pull back. You're pulling back to an ascending 50-day moving average. Remember what we talked about with the momentum on the S&P and how the momentum was kind of in that bearish phase, not really getting above 60 on a rally, getting way
yeah,
below 40 on a pullback. You have the opposite here, right? So you're becoming overbought on the rally. We pull back and the RSI remains above 40. So this is really kind of a classic bullish setup. It's a pullback within an uptrend. But I think so. So that's why I think this is setting up as a pretty good entry point. I think this is a decent play. The reason why I think it's really attractive, though, is when you look at it relative to other things, right? The relative strength of uranium is still quite strong here over the last 3 months because so
right,
many other areas of the equity space are struggling. So,
yeah,
an okay chart in equity world, when the S&P and the NASDAQ are doing what they're doing, an okay chart is actually really good on a relative basis. So I think as a relative play, something like uranium, other sectors, things like energy is why energy is still
yeah,
okay, even though it's not going higher. It's just not going down when a lot of other things are. So as an equity investor, relative strength and leaning into what's working, relatively speaking, is usually a really, really, really sound approach. That's why I think uranium is an interesting play here.
okay. Anything you want to wrap it with, Dave?
Yeah, I mean, Dale,
I
it's
haven't
always a
asked you.
pleasure. I think the biggest one I would say would be breadth conditions. So the
Okay,
the breadth conditions, which is really looking at the strength of the market. And again, you kind of call it looking underneath the hood of the market, right? You're looking
right,
at the stocks that comprise the major indexes. And a couple quick takes on breadth. I mean, one would be percent of stocks above key moving averages. We're down to around 28% of the S&P members that are above their 200-day moving average. We know the S&P, of course, broke down about a week ago through its 200-day. Most stocks, right? I mean, 7 out of every 10 in the S&P are also below their 200-day. Down to the teens, right? 14% of S&P names above their 50-day. So these are, levels that you usually see more in a distribution phase. If you look back in 2022, you can see when we're getting down to like single digits of stocks above their 50-day moving average. That's when it's like everything seems to be going down. We're kind of almost there. This is the long-term gauge that I would look at. And when we're talking about whether the S&P is still in a downtrend and what you'd need to see to change that, an indicator like this getting back above 50% would tell you there's enough of an upswing on the individual stocks in the S&P that could propel the S&P itself to go higher. So the breadth conditions, whether I'm looking at that, or something like the McClellan oscillator, if you're more short-term oriented, which I know a lot of the viewers today are, the McClellan oscillator, one chart I'm going to show you I would watch would be this. The McClellan oscillator is based on daily advanced decline data, and it's simply looking at whether those breadth conditions in the short term are more bullish or bearish. And I've color-coded in red when the indicator is below zero, color-coded in green when it's above zero. And if you look at the S&P in the bottom, you can see it actually tracks pretty well. The oscillator being above zero is really just the breadth data is improving and the market is able to go higher because stocks are going higher. When it's shaded red, which it is now, that basically means we're in a distribution phase. The breadth conditions are negative. So looking for this to go back above zero could happen as early as today if you get a nice rally. But that's an indicator I'd be looking at as a short-term sign of a good mean reversion move to the upside. You can see that in late August and mid-October, we got those signals. So looking for something similar here.
I think everyone has to go back and listen to this interview again because it is chocked full of technical wisdom and things that you could put in your arsenal to attack the markets with. So yeah, David, I learned some things today, and I think people need to follow your work and your demeanor because there's no emotion. You're talking the numbers. Your presentation's great, and your ideas are excellent. So I know they could find you on Twitter at dkellercmt, but I'd like them to tune into your shows. Why don't you tell them where they could see your videos?
No, thanks so much, Dale. Listen, always a pleasure. I appreciate so much what you guys do. You do such a good job fostering a community of aware traders and investors. I appreciate that very much. At stockcharts.com, if you click on Stock Charts TV at the top, you can get to our live broadcast. We broadcast live on YouTube every day, right at the close at 4 p.m. Eastern. My show is called The Final Bar. We recap the day, similar sort of approach to what we just did here with Dale, and sort of recap the technical implications of what we're seeing in this sort of environment. I think it's vital to have a good disciplined process of technical analysis. Just helps you make sense of these markets in uncertain times.
Look at the guests he has too. Maybe you could ask Larry if he'd grant me an interview.
I'll see what I can do. But no, the great Dale Pinkert has even come on my show before. I remember.
Oh yeah, it hasn't been a while, so it tells me what my performance was like. But anyway, David, and I love the title of your show. It's so apocalyptic. The Final Bar.
The Final Bar, right?
That's where I'm going to be when I see some mushroom clouds at your place at the Final Bar, Dave.
There
really,
we go.
Thanks so much for giving us some clarity with your elite analysis, bro. Really.
No, it's a pleasure. Pleasure, Dale. Take care, everybody.
Yeah, and good hunting this fall. We'll get back together in the winter.
Sounds good.
All right. Dave Keller, everybody, at dkellercmt on X. And go check them out on stockcharts.com. It's valuable. And that's going to be a wrap for me and you. And the team will be available in 18 minutes on the Morning Edge. Good hunting on Turnaround Tuesday. And remember, whatever's happening, don't just count your pips, count your blessings. It is impossible to be grateful and unhappy simultaneously.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.